As you know, the chances of your bank or financial institution saving you money by refinancing your mortgage at this point in time is probably not going to work. It's probably something that can't be done. Now, there are situations where refinancing your mortgage in an environment where rates are a little bit higher does make sense, but I don't want to focus on that today because for most of you out there, refinancing in this market right now with rates where they're at, it doesn't make a lot of sense. But there are ways that you can save money. If you've been watching the news, there are a couple things happening when it comes to the housing market. Number one, interest rates are higher than we're used to. Everybody knows that. The second thing is housing values are up there as well. And this can really be good news for a lot of you out there, especially if you bought your home in the past 2 to 3 years and you're carrying mortgage insurance. Some of you may have put 10% down, 15% down, but you're carrying that monthly mortgage insurance. I don't know if you knew this or not, but you do not have to refinance your loan in order to drop mortgage insurance. Dropping mortgage insurance does have some guidelines and some rules that you have to follow so that you can get that off of your mortgage, and that's what I want to talk to you about today. Because even though I can't save you money refinancing your mortgage, maybe we can help save you a little bit of money by dropping that mortgage insurance. Some of you may be paying $50, $100, $200, $200 plus in mortgage insurance, but nobody's reached out to you and said, hey, with housing values as high as they are, there's a good possibility that you might be able to drop the mortgage insurance. And so what I want to talk to you today about are the guidelines that you have to follow if you have a loan through Fannie Mae or Freddie Mac if you want to drop your mortgage insurance. Number one, if you want to request it and you haven't done any modifications to your house at all and you want to drop your mortgage insurance, there is a mandatory 24-month waiting period. So once you've been in the house for 2 years, then here would be the procedure. You would need to request to your lender in writing that you would like to drop your mortgage insurance. That's the first step. The second thing, in order for the lender to consider dropping that mortgage insurance, they're going to need to order a full-blown appraisal. So they're going to have to do an interior, exterior appraisal, and that will be at your cost. So write your lender a letter saying, I believe that I can drop my mortgage insurance because my value is there, and order an appraisal. If that appraisal comes back at 80% or less, then you'll be able to drop your mortgage insurance. And for some of you, that might be a significant savings. And the great news is you didn't have to pay to refinance your mortgage. You get to keep that same low rate that you have. Now, there is an exception on the 24-month waiting period. If you've done major renovations to a property, added a bedroom or bathroom, but done major things that would definitely increase the value of the property, the same rule still applies. You have to put the request in writing. You're going to have to list and state what renovations you've made to the property, and then an appraisal is going to have to be done at that point because you have to prove that the value is at 80% or less. So for those of you out there looking for a way to save money that have a great rate on their mortgage, don't forget about that mortgage insurance you're paying for. With housing values being up, that might be a good opportunity for you and your family to get that knocked off, save that money, and use that money somewhere else. I hope this information helps. Thank you all for watching, and I hope you have an amazing day.